All right. Looks like we've got a pretty hefty stack of articles and notes here, all about accounting close checklists.
Yeah, looks like it.
So I guess you're really looking to understand not just what an accounting close checklist is, but why it's so important.
Yeah.
Especially when it comes to things like audits or presenting your financials to stakeholders.
Right, exactly.
So think of this deep dive as like a crash course in Accounting Close 101.
Perfect.
One thing that really jumped out at me from the Conadora Mex article was this idea that even if you paid 0 taxes in a period, you still need to document that during the accounting close.
Yeah.
I mean, I guess my initial thought was, if there's nothing to report, then there's nothing to report, right?
Right. That's a common misconception.
Yeah.
But it's not just about what did happen.
Yeah.
That's also about what didn't happen.
Oh.
So a truly comprehensive accounting close aims to paint a complete and reliable picture of your finances.
I see.
Think of it like a puzzle.
Okay.
Every piece, even the blank ones, contributes to the full picture. And this meticulousness becomes especially important when you're dealing with auditors.
Yeah, of course.
Because it demonstrates a commitment to accuracy and transparency.
Yeah, so it's like showing the auditors, hey, we've got nothing to hide. We've accounted for everything, even the zeros.
Exactly.
Okay.
And that level of detail can make a huge difference in how smoothly an audit goes.
I bet.
It builds trust and credibility.
Mm-hmm.
You know, imagine trying to explain to an auditor why a certain transaction is missing from your records.
Oh, yeah.
If you can confidently point to your checklist and say, we've checked, double-checked, and documented every step,
Yeah.
it just makes it so much easier to address any concerns they might have.
That makes sense.
Yeah.
Insight Software really drove home the risks of a poorly executed accounting close.
Yeah.
They said inaccurate financial statements can be a huge problem.
Oh, absolutely.
But what kind of problems are we talking about?
Well, inaccurate financial statements can have a domino effect throughout your entire business.
Oh, wow.
I mean, think about it. Yeah. You're making decisions based on what you think your financial situation is.
Right.
But if that information is flawed, you could end up making some really costly mistakes.
Yeah.
You might overestimate your profitability,
Oh, yeah.
invest in the wrong areas, or even worse,
Oh.
fail to meet your tax obligations.
And that could lead to some hefty penalties from the tax authorities, right?
Absolutely.
Yeah.
And it's not just the tax authorities you have to worry about.
Right.
Inaccurate financial statements can also damage your credibility with investors and lenders.
Of course, yeah.
They might be hesitant to work with you if they don't trust the accuracy of your numbers.
Makes sense.
Yeah.
So it sounds like an accounting close checklist is kind of like a safety net, helping you avoid those financial pitfalls and maintain a good reputation.
Precisely.
Right.
It provides that structure and guidance to really reduce the risk of human error and ensure that every step is completed thoroughly and accurately.
So speaking of those specific steps, Conadora makes mentioned income and expense reconciliation.
Yes.
And they stressed how important it is to have detailed records of these reconciliations, especially during an audit.
Yeah.
So can you explain why this is so important?
Sure.
Yeah.
So income and expense reconciliation is basically the process of comparing your internal records with external statements.
Okay.
So things like your bank statements or invoices.
Okay.
It's about making sure everything aligns and that there are no discrepancies.
Right.
So, for example, you want to verify that every sale you've recorded actually matches up with a deposit in your bank account.
So it's like making sure that every dollar is accounted for, no loose ends.
Exactly.
Oh, yeah.
And auditors, they pay close attention to these reconciliations because they want to make sure that your revenue and expenses are accurately reflected in your financial statements.
Okay.
Having detailed records not only makes their job easier, but it also demonstrates your commitment to financial transparency and control. It shows that you're not just taking things at face value, but you're actively verifying the accuracy of your numbers.
Yeah.
Yeah.
Okay, so Condoramex also mentioned something that seemed a bit complicated to me, and that was restamping invoices.
Yes.
And they said, especially if they have partial payments across different months.
Right.
What's that all about?
So that gets into the intricacies of Mexican tax regulations.
Okay.
In Mexico, you're required to use CFDIs.
CFDIs.
Yeah, it stands for Comprobantes Fiscales Digitales por Internet.
Okay.
Which are basically digital invoices.
Got it.
And sometimes you need to restamp these invoices, especially if a payment wasn't made in full during the month the invoice was issued.
Oh, okay.
It's all about ensuring that your records align with the requirements of SAT, the Mexican Tax Authority.
So it's like a way of updating the invoice to reflect the payment schedule.
Exactly.
And making sure everything's on the up and up with SAT.
Exactly.
No.
And while it might seem like a minor detail, neglecting this step can lead to discrepancies that could raise some red flags during an audit.
So a well-crafted checklist would include a reminder to restamp those invoices.
Absolutely.
Especially those with partial payments.
Yes.
Just to kind of anticipate those potential pitfalls and have a system in place to avoid them.
Exactly. And that's just one example of how a checklist can help you navigate the complexities of tax regulations.
Yeah.
And ensure compliance.
Yeah, it's like having a guide through the intricate world of accounting and finance.
Exactly.
So we've talked a lot about audits and compliance.
Yeah.
But I'm curious, are there any other benefits to having a solid accounting close checklist?
Yeah, for sure.
Like, does it offer anything beyond just keeping us out of trouble with the authorities?
Oh, absolutely. A well-executed accounting close process, guided by a checklist, can actually help you identify trends and potential problems early on.
Okay, now I'm intrigued. Tell me more about that.
Sure, so think about it.
Okay.
Your accounting close checklist prompts you to review all aspects of your finances. As you're going through each item, you're not just checking it off.
Right.
You're also analyzing the data and looking for patterns.
Yeah.
For example, you might notice that a particular expense has been steadily increasing over the past few months.
Interesting.
And that could be a sign of inefficiency or a potential problem that needs to be addressed.
So it's like the checklist is prompting us to be more mindful and analytical about our finances.
Exactly.
Instead of just going through the motions, you're actually engaging with your financial data and looking for ways to improve.
Exactly.
Wow, that's a great point.
Yeah.
So a checklist isn't just about staying on the right side of the law.
Right.
It's also about becoming more financially savvy and proactive.
Right.
It's like a tool for continuous improvement.
I couldn't have said it better myself.
Nice.
Yeah. A well-structured accounting close checklist can be a really powerful tool for driving business success.
Okay.
It helps you stay organized, ensure accuracy, and ultimately make better decisions based on a clear understanding of your financial position.
Okay, this is all making a lot more sense now.
Good.
So what happens if you don't have a checklist? Like, what are the risks of just winging it?
Well, Takelia painted kind of a grim picture
Wow.
of what can happen when you don't have a structured process in place for your accounting close.
Oh, no.
You know, think about it. You could miss crucial transactions.
Oh, yeah.
End up with unreconciled accounts. Or even worse, incorrectly record income or expenses.
Oh, wow.
It's like trying to build a house without a blueprint. Chaos is almost inevitable.
Yeah, and all of those mistakes could lead to some serious financial headaches, right?
Absolutely.
Yeah.
Not only can it lead to those financial inaccuracies and potential penalties, but it also makes it really hard to make informed decisions about your business.
I see.
A checklist just helps to ensure that you're not flying blind when it comes to your finances.
So it's like a financial GPS, guiding us through the complexities of accounting and helping us avoid costly mistakes.
Yeah, that's a great analogy.
Okay.
It's about having that reliable system in place to navigate those financial waters safely and effectively.
All right, we've covered a lot of ground here.
We have.
We talked about what an accounting close checklist is.
Yeah.
Why it's so crucial for things like audits and communicating with stakeholders.
Right.
And even explored some of the risks of not having one. But now I think it's time to get into the practicalities of actually creating and using an accounting close checklist.
Great.
So that's what we'll dive into next.
So let's shift gears a bit and talk about actually building an accounting close checklist.
Okay, sounds good.
Where do we even begin with something like that?
Yeah, that's what I'm wondering. It feels a little overwhelming, to be honest.
Right.
Is there like a checklist to help us get started?
You know, that's actually a great question. And there are some core elements that you'll want to include in any accounting close checklist, regardless of the specifics of your business.
Okay.
Think of it like building a house. You need a strong foundation before you can start adding all the fancy features.
All right, I like that analogy.
So let's lay that foundation, shall we?
Yeah, let's do it.
What are those essential checklist components that every business needs to have?
Okay, give me the rundown.
One of the most important is bank reconciliations.
Okay, bank reconciliations.
This means comparing your bank statements to your internal records and making sure that they match up perfectly.
Got it.
It's kind of like double-checking your receipts after a shopping trip.
Oh, okay, yeah.
Just to make sure you weren't accidentally overcharged.
Yeah, that makes sense.
And just like with those receipts, Bank reconciliations can help you catch any discrepancies early on, whether it's a missing deposit, a forgotten expense, or even just a bank error.
Oh, okay.
It's about having that peace of mind, knowing that your numbers are solid.
Yeah, for sure.
So that's the first brick in our checklist foundation.
Bank reconciliations. Check.
What comes next?
What else is there?
Well, next up we have accounts receivable and accounts payable. Oh. These are all about understanding your cash flow, making sure you're collecting payments on time, and managing your outgoing expenses effectively.
So if bank reconciliations are about what's in the bank account,
right,
this is more about what's supposed to be flowing in and out.
You got it.
Okay.
You need to verify that all your invoices have been sent out and recorded, payments have been applied correctly, and any outstanding balances are addressed.
Okay, so it's all about making sure that money is moving smoothly.
Exactly. It's like making sure that the plumbing of your business is working properly.
Okay, love that analogy.
No leaks or clogs.
So we've got bank reconciliations.
Right.
We've got our accounts receivable and payable.
Yes.
Our financial pipes are in order.
What else do we need to consider?
Good question. Inventory, of course.
If your business deals with physical goods, accurate inventory management is absolutely vital during the accounting close.
Yeah, I can see why.
You don't want to tell investors you have tons of products ready to sell.
Right.
When half of it's actually out of date or damaged.
Exactly.
So you need to have a clear picture of what you have on hand. What's been sold. What needs to be reordered.
Okay.
And, of course, any adjustments for damaged or lost goods need to be properly documented.
So it's really about having a realistic picture of your inventory situation.
Absolutely.
All right, so we've got bank reconciliations, accounts receivable and payable, inventory.
Yes.
Our foundation is looking pretty solid here.
It is.
What else?
Well, let's not forget about recurring journal entries.
Recurring journal entries. Those are the ones that I always need a refresher on.
Right. They can be tricky.
So can we just go over those again real quick?
Sure.
What are they exactly?
So basically, they're entries that are made regularly, like for things like depreciation, amortization, and accruals.
Okay, I've heard those terms before.
Yeah.
But could you use a little reminder? What are those again?
So they're basically about accounting for ongoing financial activities that might not have a direct invoice or payment associated with them at that moment.
I see.
So, for example, depreciation spreads out the cost of a big asset, like a piece of equipment, over its useful life.
So instead of saying, boom, we spent $1 million on this machine.
Right.
You're accounting for its gradual decrease in value over time.
Exactly.
Okay.
And then accruals recognize expenses that you've incurred but haven't paid yet.
Right.
So imagine you used electricity all month.
Yeah.
But the bill won't arrive until next month.
Right.
Accruals make sure that that cost is reflected in the current period's financials.
Got it. So we're not just looking at what we paid today.
Right.
But also what we're going to owe down the line.
Exactly.
Okay, cool.
So are we done with our foundational checklist elements? Or is there more?
I feel like we're getting close, but I have a feeling there's one more big one.
You're right. There is one more big one.
What is it?
Payroll.
Payroll, of course.
Yeah.
Especially for businesses with employees, right?
Absolutely.
We can't forget about the people who keep things running.
Right.
So what needs to be on the checklist for payroll?
Well, you need to make sure that all payroll transactions are accurately recorded, including wages, taxes, benefits, the whole shebang.
The whole 9 yards.
Exactly.
Okay.
And speaking of taxes.
Oh, yeah. Taxes.
Let's not forget a section for those as well.
Right. Because nobody wants a surprise visit from the tax authorities.
No, they don't.
All right. So time for the tax portion of our checklist.
All right.
What should we be including here?
Well, it's going to vary a bit depending on your specific obligations.
Okay.
But some common things to think about are things like reconciling your sales tax, preparing income tax provisions, and making sure that those payroll tax returns are filed on time.
So this is where it starts to get really specific to your business and location.
Exactly.
It's like our checklist is sprouting a whole new wing dedicated to staying on the right side of the tax man.
That's a great way to put it.
So is this our complete foundation now, or is there more to add?
So this is a great starting point, a really solid foundation for any business.
Okay.
But remember, no two businesses are exactly alike.
That's true.
So you can customize your checklist from here based on your unique needs.
Okay, so it's like adding rooms onto that house we were talking about earlier.
Exactly. You start with the foundation, and then you build from there.
I love that. Okay, so what are some examples of these extra rooms that we might want to consider adding?
Well, if you have fixed assets like property or equipment, you'll probably want to include a section for asset management.
Makes sense.
This ensures that your depreciation is calculated correctly and that any disposals or acquisitions are accurately accounted for.
Right, because those big ticket items can really impact a company's financial picture.
They can.
What about businesses that deal with investments?
If you have a portfolio of investments,
Okay.
you'll want to add a section for investment reconciliation.
Investment reconciliation, okay.
Making sure that any gains or losses are accurately reflected in your financial statements.
So we're really tailoring this checklist
Yeah.
to accurately represent the financial reality of each business.
Exactly.
Okay, cool.
And let's not forget about debt.
Debt, right, because a lot of businesses have loans and things.
Exactly. So if your business has any loans or other debt obligations, you'll want to include a section for debt management.
Debt management, it's okay.
You need to make sure that all your interest payments and principal repayments are recorded correctly.
All right, so we've got our sturdy checklist foundation.
Yes.
We've started adding rooms for things like fixed assets, investments, and debt.
That's right.
It's already a pretty comprehensive picture of a business's finances. Is there anything else we should consider when we're customizing?
Well, it really depends on the individual business.
Okay.
You know, maybe you have a really complex revenue recognition process.
Right.
Or perhaps you operate in an industry with unique regulatory requirements.
Right.
The key is to identify any areas that could pose a risk during the accounting close and add specific steps to address them.
It's like giving our checklist a custom paint job.
I like that.
To really make it reflect our own unique needs.
Exactly. Make it your own.
Perfect. All right. So we've got this fantastic checklist now.
Yeah.
But how do we actually put it to work?
Right.
Do we just hand it over to our accountant and call it a day?
Well, not quite.
Right.
Your accountant obviously plays a really important role in the accounting close process.
Of course, yeah.
But a checklist is actually most effective when it's a collaborative effort.
Okay, so it's not just a task list for the accounting department.
Right, it's more than that.
Who else should be involved?
Well, think of your accounting close checklist as a communication tool.
Okay.
It helps everyone who's involved in the financial side of your business stay on the same page.
Okay, makes sense.
So depending on the size and structure of your business, you might include department heads, managers, or even just specific employees who handle certain financial tasks.
So it's like a team sport. Everyone's working together to get this right.
Exactly.
Okay.
And that's why it's so important to establish clear roles and responsibilities for each task on the checklist.
Right. We don't want any confusion about who's doing what.
Right. Exactly. We don't want anyone stepping on each other's toes.
Or things falling through the cracks.
Right.
So let's say we have our checklist.
Okay.
We've got our roles assigned. Everyone's on board.
What's next?
What do we do next?
Well, now it's time to create a clear timeline for completing each task on that checklist.
Okay, a timeline.
This is going to keep everyone on track and avoid those dreaded last-minute scrambles right before a deadline.
Oh, tell me about it. I think we've all been there before.
We have.
Scrambling to gather documents and finalize numbers at the 11th hour.
It's not fun.
Not fun at all. So a timeline would definitely help with that.
Absolutely. A well-defined timeline is like a project management plan for your accounting order.
Okay, cool.
You break down the tasks into manageable chunks. You assign deadlines. And you track your progress along the way.
Speaking of tracking progress. How do we make sure those boxes are being checked accurately and with, attention to detail?
Well, that's where quality control comes in.
Quality control.
Okay, a checklist is only as good as the people using it.
Very true.
So you might consider having a second set of eyes review completed tasks, especially those that involve complex calculations or sensitive financial information.
So it's like a buddy system for accounting.
Exactly. Two heads are better than one.
Making sure everything's double checked.
That's right.
Are there any other quality control measures that we should be thinking about?
Well, don't underestimate the power of documentation.
Documentation. Oh.
Keep a detailed record of every step that you take during the accounting close.
Okay.
It's like a financial history book for your business.
I see.
It can be invaluable for future reference.
Yeah.
Or if auditors come knocking and have any questions.
So we're not just checking boxes. We're documenting the reasoning and the steps behind those checks.
Exactly.
It's like creating this transparent audit trail for every decision that was made.
Exactly.
Wow.
It demonstrates your commitment to accuracy.
Yeah.
And it can provide valuable insights for future accounting close processes.
Yeah.
You might even be able to spot areas for improvement.
Yeah, that's a great point.
Yeah.
This has been incredibly helpful. Yeah, I feel like we've gone from a blank slate
to
this fully customized quality-controlled accounting close checklist.
We have.
But how does this all fit into the bigger picture of financial management for a business?
That's a fantastic question.
Yeah.
And it's one that we're going to explore in more detail after a quick break.
All right, so we spent a lot of time talking about this nitty-gritty of accounting close checklists, but I want to kind of zoom out a little bit. What's the so what of all of this?
Yeah, good question.
Why should we, as business owners, really care so much about this seemingly, behind-the-scenes accounting stuff?
It's a great question.
Yeah.
The accounting close isn't just some chore to get through.
Right.
It's actually the foundation for everything else that you do financially in your business.
Oh, okay. Now I'm really intrigued. Tell me more.
So imagine you're a business owner.
Okay.
We've got these big dreams, ambitious plans. But how can you actually make smart decisions to get there if you don't have a clear and accurate picture of your current financial reality?
Right.
That's where the accounting close comes in.
Oh.
It's like getting a financial report card
that
tells you how you're doing.
All right. I like that. A financial report card.
It tells you how much money you've made, how much you've spent, what you own, what you owe.
Okay.
And ultimately, whether you're actually on track to achieve those big goals that you have.
So it's not just about compliance and audits.
Right.
It's actually about getting these insights into your business's performance.
Exactly. Those insights can then help you identify areas for improvement.
Oh, okay.
Make strategic adjustments.
Yeah.
And ultimately drive growth and profitability for your business.
So it's almost like having a financial roadmap.
Yeah, exactly.
That's helping you navigate towards success.
That's a great way to put it.
Okay, so let's say we've gone through the accounting close process.
Right.
We've got our financial statements all nice and organized thanks to our awesome accounting close checklist.
We do.
What kind of insights can we actually glean from those statements?
Well, one of the most important things you can look at is your profitability.
Profitability.
Okay. Are you actually making enough money to cover all your expenses?
Yeah.
And generate a healthy profit margin?
Right, because profit is the lifeblood of any business.
Right, it is. You can't keep the lights on without it.
Yeah.
And you definitely can't invest in any kind of growth.
No.
And your financial statements can really help you pinpoint areas where you might be losing money or where you could potentially operate more efficiently.
So it's like doing a financial health check.
Exactly.
To kind of diagnose any problems and come up with solutions.
That's a great way to put it.
Okay.
You can also use your financial statements to get a really good grip on your cash flow.
Cash flow. Okay.
Which is absolutely essential. Not just for short-term survival.
Okay.
But also for long-term sustainability.
I've heard the saying cash flow is king, but what does that actually mean in practical terms?
It means that you need to have enough cash on hand to cover those day-to-day expenses, meet your financial obligations, and invest in any growth opportunities that might come up.
Okay.
Having a healthy cash flow just keeps your business running smoothly, and it allows you to weather any unexpected financial storms that might come along.
So our financial statements can basically show us if we have enough cash coming in to keep the engine running.
Exactly. They'll show you how quickly you're collecting payments from customers, how efficiently you're managing your outgoing payments, and if you have any potential cash crunches on the horizon.
This is really making me realize just how powerful of a tool these financial statements can be.
They are. It's amazing what you can learn.
Yeah.
If you know how to read them.
For sure. And especially if you're thinking about going to a bank.
Right.
Or to investors to try to raise money.
Absolutely.
Having those well-prepared financial statements is going to be crucial, right?
It's going to be your best friend.
Yeah.
Because lenders and investors, they want to see that you're running a tight ship and that you have a solid understanding of your finances.
It's like a financial resume for your business.
It is.
Showcasing your track record and your ability to manage money responsibly.
It shows that you're taking your finances seriously and that you're a trustworthy partner to work with.
So to recap, a well-executed accounting close, guided by a solid checklist, isn't just about checking boxes and making sure you're compliant.
Right.
It's actually the foundation for strong financial management.
Exactly.
Which in turn empowers us to make informed decisions, drive profitability, and achieve our business goal.
It's all connected.
Yeah.
And it all starts with that accounting close process.
All right. Well, I think we've covered just about everything there is to know about accounting close checklists.
I think so too.
We've gone from what they are, why they're important,
yeah,
to how to actually create and use them effectively. even talk about how they fit into that bigger picture of managing your business's finances.
We explored the risks of not having a checklist.
Yeah?
The benefits of a well-executed close, and how it all ties back to making smart decisions for your business.
But one thing to remember is that every business is unique.
Absolutely.
There's no one-size-fits-all approach to accounting close checklists.
That's right.
So as you go about creating your own checklist, think about your specific needs. And really tailor it accordingly.
Make it your own.
Yeah, exactly. Don't be afraid to get creative. Customize it.
That's right.
To fit your own unique circumstances.
Exactly.
And if you're ever feeling lost or overwhelmed, don't hesitate to reach out to your accountant or your financial advisor.
Absolutely. They're there to help.
They can guide you and make sure that you're on the right track.
They're like your financial Sherpas.
Oh, I like that.
Helping you navigate that sometimes treacherous terrain of accounting and finance.
That is a great analogy. All right, well, that brings us to the end of our deep dive into accounting close checklists. Hopefully you've gained some valuable insights from our conversation today. And feel empowered to tackle your own accounting close with confidence.
That's what we want. We want you to feel empowered.
All right. Well, as always, thank you for joining us on The Deep Dive, where we explore the depths of knowledge.
We do.
And empower you to make informed decisions.
That's right.
Until next time, happy accounting.